Hi, and welcome to another episode of Ecom at One. Today's guest, Asha Ismail, co-founder of Uncapped. How you doing, Asha?
Hey, I'm doing great. Thanks so much for having me here.
No problem at all. Absolute pleasure. I am really looking forward to this one. Once again, it is a topic that I am not completely au fait with, far from. I have a lot of friends that are involved in this space on the other end. And I'm on your side a little bit. So really looking forward to talking all things funding, but all things particularly e-commerce funding, which I know is going to be a cracking episode. And I know there's a lot of chat about this. Obviously, a lot of different opportunities out there for e-commerce brands at the moment around the funding space. So I think if you could kick off and tell us about yourself, tell us about Uncapped and how it came about.
Absolutely. So, I'm one of the co-founders of Uncapped. And I guess what we're really passionate about is that founders shouldn't have to give away equity in order to fund their growth. So we provide fast, flexible funding to e-commerce businesses for marketing, inventory, or hiring without personal guarantees or dilution. My background is in startups. This is actually the third business that I've been working on over the years. And the biggest problem I always had was getting the funding that I needed. And I guess working with hundreds of e-commerce founders, I've seen how they've struggled too.
Yeah.
So for me, it's a dream to get to work on Uncapped because every day I get to help other entrepreneurs solve this problem and get the funding they need. Our first customers as well were my friends. Yeah. So from the start, I think we've really created a product that is fast, fair, friendly. Really what you'd want to give to a mate. Yeah. And now we're in 22 countries, including the US and the UK, and our business has been growing exponentially. We're deploying hundreds of millions of dollars. And we now fund, more businesses in a day than the typical VC will fund in a year.
Yeah. I think the differences that are out there with the different types of funding, obviously, typically, correct me if I'm wrong, but ultimately, you either traditionally, you might go to a bank or you go to a VC, and ultimately they're going to charge you an amount, but quite often they want, obviously they want a return, but they want to, they maybe want different guarantees and things like that are tied into that arrangement. So what would you say in the simplest form is the difference between the different types of funding that's out there and and how your offer differs?
Yeah, there's a range of options, and Uncapped is really born out of the frustrations I had and I faced when I was running my first business. I did my first one in 2003, and I was young and just trying to raise 100K. Yeah, I probably went to 100 meetings and got 100 no's. Because, and I didn't want to take financing from the banks because, as you said, they all wanted personal guarantees and compounding interest. And there was venture capital, of course, but it wasn't ideal either because I didn't have a track record, I didn't have connections or that warm introduction. Yeah. And so I just repeatedly missed out on growth opportunities. Yeah. And then when I was raising money for my second business, I thought I had it all figured out, and I ended up raising millions of venture capital money, but then I got terribly diluted. And I just started to realize that the options for me were really limited, and it was actually quite depressing to think that I could work so hard and then own so little of my company.
Yeah.
And I guess I noticed it just wasn't me. Growing businesses, they're just often left to choose between raising costly venture capital or burdening themselves with traditional debt. So I thought there must be a better way. And so we started to work on Uncapped.
Yeah. I think I would say that not many people are that aware that there are other options now. Obviously it's a newer style of getting monies into a business, but typically exactly what you say. I think I've seen time and time again where people that are going to tens of or hundreds and hundreds of meetings, and it's like, blimey, it's hard work out there to get funding. And then ultimately, you're sort of begging bowl out trying to get the funding, but ultimately then, when it comes to paying things back and, dilution of equity, dilution of, your actual business, it's a lot of work when potentially you may well, worst case scenario, get pushed out at the far end where actually you're working for the people, the investors, whoever they may be, as opposed to a simpler route. So Econ Store, listening in right now, they're doing, let's say, they're doing £10 million a year or $15 million. Obviously, that's not a perfect conversion rate, I'm sure, but and they're looking to raise, through your type of model. How does that work then? So, we're doing 10 million a year. We've got a combination of maybe so much through Amazon, so much through eBay, so much through the store, maybe a third. I know it won't be that simple, but just for the maths, it might be. How simple is it, for this new style of funding?
Yeah, so I guess we're trying to create this alternative to, some of those options you mentioned around like a bank loan or a typical like equity route that a lot of entrepreneurs would go down. And, our fundamental belief is that, hey, founders shouldn't have to give away that ownership to fund the growth. So what we do is we provide, equity and interest-free investments that start at 10K and go up to 5 million.
Yeah.
And we charge a flat fee on the capital provided. And so the business, they only repay the capital as they make revenue with no set repayment date. There's no compounding interest, equity, or personal guarantees. There's also no pitching or business plans or coffees, required, which means that you can really get back to growing your company.
Yeah.
Maybe to give you an example. So you were mentioning, hey, if you had an entrepreneur and, they had a certain amount of revenue that they're generating today across a bunch of different places.
Yeah.
Say, for example, they're doing, 100K of marketing and today, and they want to get some capital for that. So what would happen was, we could give them that 100K, and what we would do is we take a fixed portion of their daily revenue, which might be like 5 or 10%, until we get 106K back.
Yeah.
So with that, there's no equity, there's no hidden fees. You're just paying that 6% flat fee.
So that's automated through every order that comes through.
Yeah, exactly. So we'll connect to the business, and be able to really understand how that business is performing, and on that basis, make a data-driven decision about the capital that they should be getting. And that's a huge change, of course, from the traditional model where if you go to a bank, they're depending on your credit score. They're trying to get you to make some projections, which, you might be half-baked, and you're spending, weeks in this back and forth of doing due diligence. Or you're going to a venture capital, situation where you're knocking on tons of doors and potentially taking, 6 months to raise that funds. When, of course, every minute that you're out raising money is time that you're not spending growing your business, time you should be spending with your team and your customers, actually getting the results you want.
And what do you find typically stores are using the funding for? Obviously, you talked about marketing. Is there any sort of trends you're seeing at the moment that people are investing in more so?
Yeah, well, e-commerce businesses, I think, have, a particular like funding challenge, right? In terms of working capital, one of the biggest challenges is, difficult terms from suppliers.
Yeah.
So when you are looking for funding, so often e-commerce business, they need that money for inventory. And as we come up to the, golden quarter at the moment, every e-commerce entrepreneurs want to make sure that they have, all the inventory to meet that demand. Yeah. So I think that's the first one. Yeah. The second one, of course, is marketing, right? Because, hey, if you have something that's working, if you have a great return on ad spend, you want to be able to put more fuel on that fire. Yeah. And kind of what we're giving you as an option is do that without, basically losing a piece of the pie effectively. Yeah. And I think especially if you compare to equity options that you mentioned, if you think about it, if you take £1 as a business and you know that you're going to get £3 back, on your marketing spend, you're putting that money into Facebook or Google. It seems crazy to then give away a piece of your company, right? Yeah. Because you're going to get that money right back. So why not instead use, another option, which, takes a much smaller expense and, keeps you in control of your business. Yeah.
It all sounds so simple, Asher, to be fair, doesn't it? So you're literally saying, we log onto your store, your platform, we fill in how much we want, I think is what we're saying, right? I want 100K. We clickety click, and then you guys say yes or no. Now, what, in terms of that sort of decision process at your end and your type of business, how does that work? What do you, so you're looking at their order patterns for the last 3, 6, 12 months. You're looking at company accounts, what's the sort of process there for getting through?
Absolutely. Yeah. So as you said, I think the simplicity is in the fact that we connect to the live data that the business uses to run. Yeah. So that means, connecting to your Stripe account, to your Google Ads, to, what you're using to, probably look at your business.
Looking at the Google Ads, are you? You're looking at the previous spend on the different platforms.
Yeah, absolutely. So we get this, transactional level understanding of how that business is performing. Yeah. And we connect it to, our revenue prediction engine. Yeah. We analyze the numbers, and then we can reach a data-driven decision. Yeah. And what happens then is typically within 24 hours, we're going to present you with multiple offers. Yeah. And you can choose the amount of revenue that you want to share with us. The more that you share, the more capital that you can access. And our idea as well is that we'll never make you an offer that we don't think the business can afford.
Yeah.
Because unlike a VC that needs 1 in 10 businesses to succeed, we need 99 to 100% of the businesses we back to succeed.
Yeah.
So in our model, we really work with our founders to make sure that they're working in a model that works for them, but also find ways to help accelerate what they're doing. Because of course, if we can help them generate those revenues faster, we're also getting paid back faster. So it really aligns the incentives between us in a way that I don't think any other form of capital does. Yeah,
no, I think that is smart. That is really smart. It's not something, as I said, when we came on, it's not something I'm that familiar with, but I sort of had a feel that these sort of models are out there, but I don't know any clients that are using it. The bottom line is, you're using historical data for the Econ Store. So obviously all our listeners are Econ Stores. If you're sitting there and you're spending that 10 grand a month on Google ads and your 5 grand a month on Facebook ads, and you're turning over whatever it is, 200-300 grand a month on your store, all that data is going into your platform. From that, your algorithm is saying, yeah, you can afford to pay, we can afford to lend, or you can afford to pay back potentially an amount. Do you give them like a to and a from that they can borrow then, or is it sort of a one number or?
Yeah, absolutely. So we'll give usually a range of offers.
Yeah.
And the business can choose what's right for their needs.
Yeah.
So I think that's key as well. And definitely has been the experience with so many of the founders that we have worked with.
Yeah.
And there's been a big range of businesses as well. And of course, they're going to have different needs in terms of what they're actually looking for. So we really try to make it tailored to their situation.
Yeah.
Maybe it'd be helpful to give you some examples.
Yes.
So, for example, we've worked with some founders who are bootstrapped, right? And they've taken really limited investment. One of our first customers was a sustainable fashion brand called Headwind.
Yeah.
And, they had this problem that so many e-commerce fashion businesses have, right? Where basically you are juggling cash between inventory and marketing. So, the founders, they would have to basically wait till the current season would sell so they could then invest and get the returns in the next season.
Yeah.
And that just really limited their growth.
Yeah.
And, Alex and Anna are the founders of Headwind. So they signed up from us. They got a 50K advance at the end of 2019.
Yeah.
They used the money to put into Facebook and Instagram marketing. And in Q1 2020, their revenues grew 11,000% compared to the previous year.
Yeah.
And for me, I feel like it's such amazing to see that, because you can kind of see that what's possible for an e-commerce business, because they're hard to get started because of the working capital issue. But once you have something that works and that people want, you can then scale a business like that so incredibly with actually a really limited number of people. So I think it's just getting over that hurdle is the key to making it work in e-commerce.
Yeah. I think, I see it a lot. I actually had a conversation this morning. I met some friend of mine for coffee, and he was talking about a business that he set up. And it's how, I won't go into too much detail, but helping creators create membership and information products. And these are big fairly sizable influencers that just don't know how to do that side of the business. They can create and they know their topic, but they can't, and they're not really selling a product. They're offering a service, so it's very limited what they can do. And we were sort of discussing, well, he can help them create the product because that's what he does. But then obviously ultimately they then got to market it. So I'm just thinking this would work perfectly, potentially, but it'll be a newer thing. That's the only challenge. So there wouldn't be much data there from an e-commerce perspective, but there'd be other data there. What would you say on that? Let's say you're working with somebody that's maybe not got huge revenues yet, quite small revenues. And we don't normally talk about the smaller guys, and the guys that are getting started. A lot of our audience are sort of already established, but maybe they're maybe information product based, and it's a newer product, but they've maybe got a strong following already. They've got some financials, but maybe not doing the hundreds of thousands a month. What would you say that what is your type of offer an option, or what would you suggest for these guys?
Yeah, absolutely. So, we're able to get involved in businesses much earlier than a lot of different options. I'd say Uncapped is great for you if you're generating sales online though for at least 6 months.
Yeah.
And you're doing at least 15K of revenue per month.
Yeah.
Have positive unit economics, and are ready to grow.
Yeah.
And we have seen that model work for a variety of different companies, whether they're bootstrapped or they're already venture backed.
Yeah.
But it's also been great to be able to help businesses a little bit earlier in their journey as well, when I think options are a little bit more challenging.
Yeah. So it's available, really. It's an option for them. So what's your thoughts on crowdfunding platforms, Dan? A bit of a tangent here. We'll step to the side a little bit. And crowdfunding, I think, again, I've got another very good friend of mine. I don't see him too often now, and he set up which is now a brand, and sold it. And he very much started that and did various crowdfunding projects. This is a few years ago now, and raised several high hundreds. I think like 500,000 in the second one, 200 in the first, maybe. Again, not something I've personally been involved with, but I know obviously that's an option and seems very, very prevalent nowadays. It's obviously not just the one platform maybe that there was a few years ago. A lot of different providers now. What are your thoughts on crowdfunding?
Well, based in my last business, I had experience with every type of fundraising possible. So I did the angels, I did the VCs, I did some debt, and I even did one of the largest crowdfunding rounds that happened in the UK. So that was, in the earlier days before, Monzo came along and blew everyone's targets out of the water. We had the largest target at the time. And I guess, with crowdfunding, you're using small amounts of capital from a really large number of individuals to fund that business.
Yeah.
And what I like about crowdfunding, I'd say, is that it's a lot less exclusive than venture capital, right? Because you're able to actually leverage the power of the people you already know and the people who are your customers.
Yeah.
And a successful campaign, it really validates your business idea and potentially builds that customer base.
Yeah.
I would say it works best for B2C businesses.
Yeah.
And, it's that business where actually they have that pool of customers who can also become investors.
Yeah.
And it, can bring a real sense of engagement. But you've got a threshold to meet, and it's basically all or nothing, right? And accordingly, the consequences of failure are severe, right? Because if you're turned down by a venture capitalist, you can always seek out another VC.
Yeah.
But if your crowdfunding campaign fails, it can be a lot harder to recover. Yeah. And most platforms, they're not going to let you list again. And a public, crowdfunding campaign that's failed, at least the majority of angels and VCs, signals either your plan or your execution isn't good enough.
There's a problem there possibly that's going to put people off, isn't there, that next time around? So is it maybe if you think of us, there's quite a lot of variables there, I guess, that we would to get into the detail, but I guess would it be, if you're doing that first crowdfunding, you've got to be very realistic. If you go in for whatever, some crazy £1 million number, when you're setting up, it might be more like a 50, 100 or whatever it may be, like a smaller value. Would that be sort of a bit advice? Or
well, I think you've got to always connect the funding that you need and the funding that you're going for to how your business is performing today. And I think that's true of any funding option that you're going for. With Uncapped, our funding will typically relate to the amount of revenue that you're generating, because we want to make sure that you are going to be able to pay that back, right? And that you're not over leveraging yourself and putting yourself in a situation where it's going to be a challenge. Yeah, one of the nice things, I guess, about revenue-based finance in general as a concept is that, the repayments are tied to your revenue.
Yeah.
So if your business slows down, and, if you are in a place where your forecast isn't what you thought it was going to be, that's okay. Your repayments also just slow down or even stop. And I think that's important as well, because the British Business Bank, they did this study and they showed that 73% of entrepreneurs defer growth opportunities rather than take out capital because they're worried about the risk associated. And, in the times that we've just been going through, a lot of entrepreneurs are being more cautious, about their approach. And so they've said, hey, I'm just worried that actually the capital I'm going to take out could actually become a cash flow problem in itself, right? So I think the beauty of this solution is that it solves for that. And hopefully it means that entrepreneurs can be more confident to go take out that capital and to grow their business. And of course, entrepreneurs are going to be the people who are key to our economic recovery. So if they feel confident to go out and build a business, they're going to be able to create the jobs and opportunities which are important for all of us.
Yeah, no, that's great advice. Great advice. So obviously you've got, not just at Uncapped, but obviously over the years you've raised a lot of money for your own businesses. I think it'd be good to, from the trenches, give us some, war stories or, obviously I think, my notes are telling me that you've raised over 100 million yourself. Is that correct? Yeah.
Yeah, that's right. And I think it's funny. We probably raised the capital so other founders don't have to. And we've raised a lot of money from venture capital as
Yeah.
well,
Yeah.
which might seem counterintuitive in a way because hey, we're talking to you about creating an alternative to funding. But it's quite strategic because we've raised this capital basically to build this new asset class.
Yeah.
And what I would say in general is that equity, it's part of an entrepreneur's toolkit. But we believe that it's the wrong tool to fund the repeatable, predictable parts of your business.
Yeah.
For example, digital ad spend for an e-commerce company.
Yeah.
But we've basically been out to go out and raise money to spend on more of the technical risk, the R&D side of things, and that's a perfect tool for where equity makes a lot of sense for a business in those very early days. So yeah, we're fundraising, so hopefully a lot of entrepreneurs don't have to, but yeah, it is definitely a journey.
It's
I mean,
quite an interesting one, isn't it? Obviously, your platform is, you're raising money via different ways to then lend money via your new platform. So it's quite a full circle, really, isn't it? So I'm sorry to interrupt you, but I'm really interested. So, the guys that are listening now, okay, let's say they're not, there's people listening that don't want to do the uncapped way and don't want, they want to raise money the VC way or a different way. And they want to raise 10 million pounds. I know that's really like, there's a lot of different variables there that I'm not going to give you right now, but obviously you've got the scars from the trenches over the years. I know various friends that are doing this in different levels, but okay, so you've got an offer, you've got a product, an offer, you're going in front of these people. Step me through some of the things that have worked really well for you, when you've basically no doubt walked into a room, and presented your idea. Talk me through some of the things that work well for you.
Yeah, I think the first piece of advice I would have is to start with a winning fundraising mindset.
Yeah.
So, fundraising is not easy. In fact, it's one of the most frustrating and time-draining activities that you as a founder would have to undertake as part of your company's growth strategy.
Yeah.
And like early on, when you're a small team, fundraising efforts are likely to consume, far more time than you'd like or want them to. But, if you say you really want to raise equity, unfortunately, there's no shortcut to that process.
Yeah.
So, I think the first thing is that you have to really develop a fundraising mindset that centers around a couple of different ideas. And I think the first one is to plan ahead. Yeah. So, fundraising is a process and it can take time and it's rarely quick or painless. So the earlier you start planning for that process and developing relationships, the better off you're going to be. Yeah. And the more likely you're going to avoid, fundraising in desperation mode. So that's the first thing. Yeah. The second thing I think is to expect rejection. You have to embrace rejection as part of the process and not take it personally. And I've seen so many founders who really do take it personally, right? And I think, being able to be resilient and pull back from that is to realize that rejection is going to happen. Yeah. For good reasons, for dumb reasons, and anytime for reasons that will remain forever a mystery.
Just keep tweaking as you get those rejections. We're just slightly, right, we know we've got a better fit now. We better understand, these type of investors, or the product needs a tweak, or the deck needs a tweak, or I shouldn't have said that. I should have said that. And just
absolutely.
Yeah.
And practice makes perfect. So, every meeting is a form of practice that makes you better for that next meeting. Yeah. And, the success or failure of one meeting is never the end of your story. It's just a step along the way. And as you said, you can learn from the past. You can analyze, what was said in those meetings, and learning how to improve your mistakes. I think it's the most crucial step in finding the right investor more quickly. And just as we're, as e-commerce founders, we're used to like analyzing all the metrics of our company, right? We'll have all of our dashboards up, we'll be looking and tracking things. If you can apply some of that mindset and, think about, writing down all the questions that you were asked in that meeting, it's a really good way of ascertaining the areas of your pitch that are still a bit ambiguous. You have to follow up on those information requests that you get. And if you get asked the same question multiple times, that's a chance to consider incorporating them into your materials earlier, or, maybe adding an appendix.
Yeah. Yeah.
And I think practicing, with the right investors is also a good approach. Maybe you want to practice with, that list of investors, or you think of your top ones, you want to maybe put them aside, think about who are some of the people you're going to initially go out to. Yeah. And then wait until your pitch really feels organic.
Yeah.
And, that will mean that when you do get to that investor that you really are excited about, you're going to come in with the confidence to be able to execute against it.
Yeah, I think that's great. I think that's some really good sound advice there. I think mindset obviously is everything, isn't it? So you've got to believe in what you're doing. You've really got to believe in the concept, the idea, the project. And then typically, I think what I believe, and when I see people sort of not necessarily pitching for finance, but pitching their business, it's like, one, I don't think you believe in it, so it's going to be hard for me to think I'm not so sure. But then just the level of quality in that pitch and the way that deck's put together and the way that just the professionalism you're asking for, what might be 50 grand or 50 million. Obviously, if it's just a scrappy PowerPoint, it's not gonna rock, is it? So and then practicing it. I keep getting on my feed, or it's slightly different, but it's very similar. The Dragon's Den pitches that come up, and some of them are obviously a lot better than others. And they're sort of the perfect. I keep getting like the perfect pitch. Some of them are just so good. Obviously, nerves and practice, getting potentially help with your nerves and getting help with presenting, and that people I can imagine just sort of walk into these meetings and maybe are seriously underprepared and expect somebody to lend them, £500,000 or whatever it would be, maybe. So yeah, I think some sound advice there. Have you got any sort of war stories where things maybe haven't gone so well and things to avoid now? And I think you sort of touched on it there in a roundabout way, but any sort or things you've heard of people that went in and some big mistakes that get made?
Absolutely. I think there are so many deadly mistakes that entrepreneurs should avoid. Like one, it's giving up after that first rejection, or asking too early, or bringing up issues during negotiation. Not being underprepared, as you said, is another one. Or underestimating your future revenue, because for example, typically when you go and meet a investor, whatever numbers you give them, they're going to apply a little bit of a haircut on that. And so if you don't have the confidence to believe in what your numbers are going to be, don't have that ambition, then you're kind of setting yourself up for a failure. But I think the biggest one I would say is not asking. Don't ask, don't get. And if you don't make an actual ask, no one will give you actual money. And if no one gives you actual money, you actually can't do anything with it. So it's very simple, don't ask, don't get. The other thing I would say, coming back to your point previously about like, how do you raise that big money? I think it's actually that in the early days, the main drivers behind you raising that money is two things. One is FOMO, which is like fear of missing out. And the other is having your growth metrics. Maybe if you want to raise really big money, you need a third fact, which is a big vision. But it still always comes back to the idea that fundraising is a sales process. It's a numbers game, right? And you can't be demoralized because you just need that one yes. And it requires that confidence to basically act in demand.
So the fear of missing out for the investor, you mean?
Yeah, absolutely. Right. And I think another analogy I often give is that fundraising is a little bit like dating. Right? Because, unless you're really lucky and investors come to you, fundraising, it does take all these different meetings with all kinds of investors, good and bad. But, just as like when you're, going on a date, you want to come in from a place where you are not coming there from a form of desperation, right? Because the investor is going to sense that. And just as you would if you were meeting somebody for, that first drink. And you want to be able to therefore come across with a coherent story with ambition, but to be acting in demand. And I think that's going to be more likely that you're going to get the ideal investor that you're looking for.
I think that's a great end to our episode, Asha. I think that's really opened my eyes. I think as an ex eCommerce store owner for many years, that was the funding from Uncapped, and the way that works is something that just wasn't available. And I think I'm sure a lot of stores are aware, but obviously we'll link up everything in the episode and in the show notes. But I think it's just really opened my eyes, and I'm sure it will a lot of our listeners. So I always like to end every episode with a book recommendation. Do you have a book that you would recommend to our listeners?
Well, yeah, I actually have a few. I mean, I guess since we're on the topic of fundraising, I think maybe I'll give you some fundraising resources. And I think one of my favorites is the Fundraising Field Guide by Carlos Espinal. Carlos is actually one of the early investors in Uncapped, and I feel like I've learned so much from him, and even the advice that I'm giving today. So I think he's a great resource to check out.
Yep.
If you want to do a crowdfunding round, because you mentioned, hey, you have some folks interested in that space, I think a really good book is Nathan Rose's book, Equity Crowdfunding, The Complete Guide for Growing Companies. And then, of course, if you want to learn about revenue-based finance, we have lots of great resources on weareuncapped.com.
Yep, that's fantastic. That is very good. Yeah, thank you so much, Asher. So for the guys that are listening and want to find out more about you, more about Uncapped, is it Uncapped? Go to Uncapped? Yeah,
absolutely. I actually also had a bit of a special offer for your listeners. So, you know, if you are listening and you run an e-commerce store and you make at least 10K per month and want to either scale your campaigns faster or purchase inventory, we can help. So, you know, in October last month, we ran a really successful campaign and we funded hundreds of store owners, just like you. We gave them up to 50K absolutely free. So there was no fee. Normally we charge a 6% fee, but in October we did it for exactly 0. Wow. So on our website, you won't find mention of it anymore. It's gone. But we thought, Richard, for the listeners of your podcast, we're ready to make it happen again. So all you have to do is reach out to me via email, asher@weareuncapped.com with the subject line secret 50K and a bit about you, and we can see if you qualify. So again, if you run an e-commerce store and make at least 10K per month and want to scale faster, reach out to me personally at asher@weareuncapped.com.
That's brilliant. Is that 10K turnover or 10K profit?
10K turnover.
Yeah, I thought it was. I thought I'd just clarify for that. Yeah, that's brilliant. Well, that is so kind of you. We'll link everything up in the show notes, and obviously, yeah, that's really good of you. Thank you so much. Well, thank you so much for being a guest on the show, and I look forward to catching up with you again.